Are you aware that by strategically applying cost segregation, property investors can fast-track depreciation deductions, potentially slashing their tax obligations by thousands of dollars annually? Through cost segregation studies, this financial move is not just possible, but highly beneficial. In today's video, we'll dive into the world of cost segregation, a powerful tool that can dramatically reduce tax burdens and enhance cash flow for property owners. Cost segregation is a critical tax strategy that involves identifying and reclassifying property assets to maximize depreciation deductions. So let's get started and unravel the benefits and processes behind cost segregation. Don't forget to like, share, and subscribe for more insights. What is cost segregation? Cost segregation is a tax planning tool that allows investors to increase their cash flow by accelerating depreciation deductions and deferring federal and state income taxes. In the context of real estate, cost segregation is the process of identifying personal property assets that are grouped with real property assets and separating out personal assets for tax reporting purposes. As you might be aware, residential property can be depreciated over a period of 27.5 years, and commercial properties can be depreciated over a period of 39 years. However, some of the real assets such as carpeting, electricals, HVACs, roofing, certain landscaping, etc. within your investment property can be depreciated faster than the property itself using accelerated depreciation or cost segregation studies. Let's look at a real-life example. Suppose a business owner, Alex, buys a new office building. By doing a cost segregation study, Alex finds out that 30% of the purchase price can be categorized into faster depreciating items. Instead of waiting 39 years, since offices are classified as commercial properties, to get all his tax deductions, Alex can now get a significant portion of those deductions in just the first few years. So in this case, things such as flooring, HVAC units, electricals, appliances, plumbing, etc. can be depreciated faster and written off in the books in the first year of installation itself, if that makes sense. This means Alex will pay less tax up front, improving his business's cash flow when it matters most. What are the benefits of cost segregation studies? The first advantage is accelerated depreciation deductions. By identifying and reclassifying personal property assets to shorter recovery periods, 5, 7, or 15 years, instead of the standard 27.5 or 39 years for real property, a cost segregation study allows for accelerated depreciation deductions. The second advantage is deferred taxes. Accelerated depreciation results in reduced taxable income in the early years of property ownership, which defers tax payments to future years when the depreciation deductions are lower. The next advantage is increased cash flow. The tax savings from accelerated depreciation increase the property owner's cash flow, which can be reinvested into the business or used for other investment opportunities. The fourth advantage is improved return on investment, also known as ROI. The increased cash flow and tax savings can significantly improve the overall return on investment for the property. The fifth advantage is catch-up depreciation. For properties that have been in service for a number of years without a cost segregation study, the IRS allows property owners to catch up on the depreciation that could have been taken in prior years in one current year, without amending past tax returns. The sixth advantage is tax planning opportunities. Cost segregation can be a valuable tax planning tool, allowing property owners to strategically manage their tax liabilities based on their current and projected income. The seventh advantage is reduction in real estate property taxes. In some cases, cost segregation can lead to a reduction in real estate property taxes if it is determined that certain components of the property are not considered real property for taxation purposes. The eighth advantage is estate planning benefits. For estate planning purposes, a cost segregation study can help establish a lower value for real property components, potentially reducing estate taxes. The ninth advantage is disposition of assets. When parts of a property are replaced or renovated, a cost segregation study can help identify the remaining basis of the disposed assets, allowing for a write-off and reducing taxable income. The 10th advantage is reclassification of assets for bonus depreciation. Certain personal property assets identified in a cost segregation study may qualify for bonus depreciation, which allows for an immediate deduction of a percentage of the cost in the year the asset is placed in service. A common question that comes up in discussion is that if demolitions and renovations be cost-segged? Yes, demolitions can be part of cost segregation studies, particularly when they are associated with the renovation or improvement of a property. When a building or structure is renovated, certain components may need to be removed or demolished. The costs associated with the demolition of existing structures or building components can potentially be segregated and allocated to different asset categories for tax purposes. Plus, you get massive tax write-offs each time as well. In simple terms, cost segregation turns your property investment into a more efficient tax-saving machine. It ensures you're not leaving any money on the table by accelerating depreciation, sharpening your financial strategies, and securing your investment against future risks. Whether you're renovating, buying, demolishing, or simply planning for the unexpected, cost segregation digs deep into the details to find financial benefits that might otherwise go unnoticed. A common question that we get is, can cost seg studies be done for past years? Yes, cost segregation studies can be conducted for properties that were placed in service in past years. This is often referred to as a look-back study. Property owners who have not previously conducted a cost segregation study can still benefit from the potential tax savings by having a study performed on property acquired or constructed in previous years. The IRS allows taxpayers to catch up on the depreciation that should have been claimed in prior years had a cost segregation study been done when the property was originally placed in service. This is done without amending prior year tax returns. How often should you consider doing a cost segregation study? Cost segregation studies are typically performed once for each property when there is a triggering event. 1. Every time you buy or build. Whenever you acquire a new property or finish constructing one, that's the perfect time for a cost segregation study. It's like taking a snapshot of your property's financial health right from the start. This study will break down the costs of your new acquisition or project into parts that can save you money on taxes sooner rather than later. Thirdly, after any major renovations or improvements, have you recently upgraded your property? Maybe you added a new wing, refurbished the interiors, or installed energy-efficient systems. These changes can significantly affect your property's value and how it's taxed. Conducting a cost segregation study after such renovations can reveal new opportunities for tax deductions, ensuring you're not missing out on potential savings. When tax laws change, that too is the right time to get a cost seg study done. Tax laws can change, and when they do, they might bring new opportunities or considerations for property owners. If there's been a significant update to tax regulations, it's a good idea to check if a new cost segregation study could benefit you under the new rules. It's like updating your apps to make sure you have the latest features and security. Staying current can offer new advantages. It can be done periodically for large or complex properties. If you own a large commercial property, conducting cost segregation studies at regular intervals, even without significant changes, can be beneficial. Over time, minor renovations, changes in use, or wear and tear can affect how parts of your property depreciate. A regular checkup every few years can ensure you're always maximizing your tax benefits. Once a cost segregation study is completed, it is not typically repeated unless there is another significant capital event that changes the nature or use of the property's components. However, it's important to maintain good records and track any subsequent improvements or dispositions of property components, as these can affect the depreciation schedules and may require adjustments. If a property owner has not previously conducted a cost segregation study on an existing property, they can still have a study performed to take advantage of the potential tax benefits. Is getting a cost seg study expensive? Generally, the fees for a cost segregation study can range from a few $1,000s for smaller properties to tens of thousands of dollars for large, complex properties. Despite the costs, a cost segregation study can provide significant tax benefits that often outweigh the initial expense. The increased cash flow from accelerated depreciation deductions can result in a return on investment that justifies the cost of the study. Property owners should conduct a cost-benefit analysis to determine if a cost segregation study is financially advantageous for their situation. And that wraps up our journey through the world of cost segregation and how it can unlock significant tax savings for property owners. If you found this information helpful, please give us a thumbs up, and don't forget to subscribe to our channel for more insights into maximizing your property investments. Sharing this video with friends and colleagues who could also benefit from these strategies would mean the world to us. Lastly, if you have any questions, experiences, or topics you'd like us to cover next, please drop a comment below. We love hearing from you and are here to provide the answers and insights you need. Thanks for watching, and see you in the next video.